Hello, this is Paul with OUTPACEsys, and this is our second report for the week ending on July 25th, 2008. In a previous report we have given you a brief summary of the performance of our system and our trades so far this year, and this is the regular report addressing the market behavior for the past week. In a nutshell, in the past couple of weeks, stocks have been trying to recover from the severe downtrend that got renewed strength at the beginning of June and recently caused a nosedive to multi-year lows. Here in this picture we see the behavior of the Dow Jones Industrial on a weekly performance chart. The closest level of resistance have been broken, and now the indices are struggling to define a longer-term posture for the various markets. As you see in this picture, the Dow Jones closed still a little lower, although for the week, although it has been climbing up from the lows of the previous week. If we look at the S&P 500 and the Nasdaq, we see similar behaviors. Crude oil has certainly taken a beating in the past 2 weeks, and as we can see here in this weekly chart, although the clamor of a bear market for oil that's being touted in the news these days may be a bit premature, since the fall stopped right at the long-term support levels that we've been watching, and there will be probably some meandering around these levels until the new direction is defined. Gold receded a bit too, down to a less severe support level than crude oil, and for the time being remains in a bullish long-term posture. So looking ahead, given the indecisive posture of the markets, next week we'll focus on short-term trades, and we'll keep on hold the long-term positions. As far as our trades are concerned, this week we had a very fast trade, just a 2-day trade that we performed on Thursday and Friday. On the diamonds, we had a short with a 111 put with the expiration in August, which delivered 85% profit in just a couple of days. So looking a little more in detail at the markets, as we said, in the past several days we've seen a welcome turn to the upside in equities at about a couple percent points for these past 10 days. The belly posture that we've been following for several weeks is now being somewhat challenged, but we'll need to wait for clarification in the next days. In this chart we see the 1-week performance of the Nasdaq, the Dow Jones and the S&P 500, which gained a couple of percent, as I said before. The year-to-date performance is still way in the negative. The Nasdaq is at about 8% down, and both the S&P and the Dow are minus 15% approximately. No big news in the sectors. This is the 1-month performance of the sectors that we are following, and this is the year-to-date performance. The news from this particular chart is that even the energy sector is now in the negative. The financials have improved in this last week or so, recovering a bit from the minus 40% that they had reached, but they're still at about minus 25-27%. From an international point of view, the scenario is similar once again. In these last several days, most of the countries that we follow have improved, just like happened here in the States. But everybody is still in the negative for the year-to-date view. Now coming to the big guys, oil, like we said initially, oil has taken a dive in the past 2 weeks. Gold, after having meandered around 0% in this at the beginning of this period, has taken up again and seems to be in a relative rally. Government bonds have improved a little, taking advantage of the fall in the oil. From a year-to-date point of view, crude oil is still beating everybody else by a long shot. We have to see if the long-term support levels that are being now challenged will keep, or oil will go further down. This is it for this week. Thank you very much for listening. Come and visit us at outpacesys.com for more detail on all these comments. Happy trading!